Right, hi everyone. Welcome back for lesson number 2. I am Richard Fetko, the founder of Altfins. And once again, thank you for making time to educate yourself about technical trading. And let's continue. Again, if you missed the prior lesson and webinar, you should have access to the archives under the platform, under the education tab. And if you can't find that, just hit us up on chat. So let's recap what we learned on the last webinar. The first webinar, the introduction to technical analysis, we talked about the definition of technical analysis, why it should work, and the conclusion there is that we basically try to use historical prices and historical data and patterns to predict the future trend for altcoins, in this case, cryptocurrencies, although it works for other financial assets as well. Trends tend to have the tendency of continuing. And so identifying trend is really 50% of success is when we're able to identify trend. So technical analysis does that with looking at the historical data and patterns, and really helps us then identify high probability trade setups. And that's what Altfins platform is really a tool to help you increase your chances, the success rate, your win rates, by finding high probability trade setup, because trading is probabilistic. And that means that we're going to find techniques to increase our chances, hopefully to 65-70% winning rates, but there's still going to be times when we will be wrong. But winning 65-70% of the time should be enough to make some profitable trading results. So let's also, the other thing that we reviewed or we covered in the last lesson was picking the time frame or time interval, right, on our platform. There are 5 time intervals from daily down to 12-hour, 4-hour, 1 hour, and 15-minute. Again, the decision about time interval is somewhat personal. It depends on the experience of the trader. Less experience should be on the higher time interval, the slower sort of pace on the daily 12-hour, 4-hour perhaps. The more experience tend to then maybe even take advantage of the lower time intervals. But it's also depending on the time you have. If you're like me and have 30 minutes a day to dedicate to trading, then you don't have time to react to all the possible changes in the signals on the lower time interval, on the 15-minute. Things change quickly, and you have to be in a position to react and close the position and so on. And so that also dictates what time interval you work with. And for the most part, we will be working in the daily. We also covered what were some of the most used indicators. There's a plethora of indicators out there, but the most used ones that we will focus on are moving averages, and we'll use moving averages quite extensively today to help us identify trends, and also a couple of other indicators that we showcase and that we will cover later in greater detail are RSI and MACD. And lastly, we talked about the differences between the line and the candlestick charts, right? Line charts are okay, simple, easy to digest what's going on in the price action, good for big picture determination of trend. But really, candlestick charts is where you should be spending your time, because those candlesticks are far more informative than line charts. Also, what we did at the end of the lesson, as you recall, is we did a trade, and we like to do that every lesson. And the way we did it, we did a quick scan, search for a recent MACD crossover. And we also looked at coins that had a price above the 200-day moving average. And we ended up finding one possible trade opportunity, which was CELO, which is now in our portfolio here, right? Looks like it's trading up since we basically did the trade about a couple of days ago. So it's up about 10% since then. So that's so far working out. We can take a look at why we did the trade. And that's another helpful tool or tip for you, is to write down, why did I do the trade? What were my assumptions? So that one, you can learn from that down the road over time, but also come back to that when the trade goes against you and say, did the assumptions, have they changed? Is it time to close the position? So one helpful tool here actually is if you do connect your exchange account APIs to our system, then you'll be able to do this, basically filter the screener to just your portfolio and quickly jump to your portfolio and analyze the positions in your portfolio. So CELO is the one that we traded, as you recall. Couple of things that we saw there, right? As I mentioned, we started off with, hey, what coins have a recent MACD, bullish MACD crossover? So this one did, plenty of others as well. And the other thing that we wanted to make sure is that price is above the 200-day moving average. The 200-day moving average, as we'll cover today, is a great sort of a long-term indicator of the trend, a big picture trend. It doesn't swing, it doesn't change very quickly because it includes 200 days worth of closing prices, right? So it's a great trend indication. And I typically like to see prices above that because the 200-day moving average can serve also as a very strong either dynamic support or dynamic resistance. And so I like to see the price trade above that. And so that was the case here. We had the bullish MACD crossover, prices above the 200-day moving average. But also what was another piece of evidence for me is that if you look at the big picture and try to find the resistance areas, so these are areas where the price has turned one way or another, right? So if you look at some of these areas here, let me get my tools right here, right? In the past, in the spring, the price had reached and rejected at this level, that's $6. Similarly here it exceeded but didn't close above it, right? And here once again struggling above that, but on the last few days it finally broke through that level. Now it could end up being a false breakout, but for now it looks legit. Okay, it's above that $6. It's continuing its trajectory higher. And so that's a breakout, a bullish breakout above the resistance level of $6, which seems quite significant based on the history. And my bet is that we'll, with the continued momentum, we'll continue to approach the $8, which is another, if you look at the longer term picture, is another quite significant resistance level, right? Right. We've gotten rejected here. This is not quite that close. Here, even though it exceeded it, it came back here as well. So $8 is a you know, it's almost your all-time high. So that's going to be tough to crack through. So I'll probably close out the position close ahead of that and wait for a breakout confirmation thereafter. So a couple of other things that I would recommend that you do when you do enter a position, which I didn't have time to do last time, is to create alerts. As I mentioned, I like to be potentially closing that position when it gets to $8, which is the very significant resistance level. So I'm going to set up an alert, and doing that means a couple of things. First, I'm going to create a very simple filter. The coin is CELO, and the price, let me know when the price, last price, is above the value of, I'm not going to put quite $8 because the resistance and support areas they're actually zones. So it's plus or minus some, right? It's not an exact science. So I'm going to give myself a warning when the price gets to about $7.80. Okay. So I'll click on done. And now I'm going to click on the alert icon to create an alert and give it a name. CELO is above 780. And that's it. So that's one alert. The other alert is on the opposite side. I like to be notified when the price of CELO turns and goes against me and breaks below the $6 support level. So let's basically repeat that, or similarly, and this time I'm going to say last price is below value $6. Okay. So, and once again, create an alert, CELO under $6. That's my alert to potentially get out of the trade. And then another one, since MACD indicator was a key signal for us to get in, among other things, it's not the only thing. It was obviously the resistance breakout as well as price trading above the 200-day moving average. But MACD certainly was part of the strategy here. So I'm going to create a signal that when MACD turns bearish or sell, the system will alert me. So I did that by adding, again, coin is CELO, MACD is below MACD signal line, which is a bearish MACD crossover. I like to be notified. That may not be, again, a clear signal for me to get out, but it's certainly a warning sign. So CELO, bear MACD crossover. All right. So this is a bit of a position management work that you should be doing, because once you add more and more positions, it'll be hard to track. Which levels are critical levels for that position. Now, once I created the alerts, you can see the alerts on the alert management. So I've got these 3 alerts here. You could later on disable them, or you could delete them as well. I'm going to enable these right now. When I get alert notifications, they will show up here as well as in my email. And we are in the near term looking to add a Telegram channel notification as well. So that's that position that we put on in the last lesson. Just wanted to review the thought process and the workflow on the platform that's involved. So let's go ahead and dive into the trend trading strategy with using moving averages. So what is trend trading? Trend trading is what you will be doing most of the time. I think swing trading is more advanced. We'll cover those strategies as well. But trend trading, for the most part, is what I do, what most, I think, beginners, intermediate traders should be doing, which is simply identify a trend relatively early, jump in on it, and ride it. Sounds simple, right? Well, it is and it isn't. But that's what trend trading is. And how you identify a trend, there's various techniques that we will cover in this lesson. But overall, moving averages are heavily used to identify trends. And in fact, some of the other techniques that I have listed here, such as golden and death cross, slope, again, all of these use moving averages one way or another. So the textbook definition of an uptrend is a series of higher highs and higher lows. You may have heard that in the past. And here is a chart of Bitcoin here. As you can see, that was a beautiful run up in the spring of last year that I demonstrate in this chart, where we see that prices go up, but they don't go straight up, right? In the longer term horizon, there's always peaks and valleys, peaks and valleys. Now, a swing trader will try to time the peaks and valleys. A trend trader, for the most part, he's just concerned about getting that trend relatively early and just riding it through the peaks and valleys, as long as we're seeing higher highs and higher lows. So the price right here, really, let me see, really, it's when you compare already right here, this was a higher high from the prior higher high. Then it dipped, but it didn't dip as low as previously. Then it made another higher high here, and it dipped, but not as low as previously. So that was a higher low, right? And so on and so forth, right? Here I have higher high, higher low, then it rebounded. So it becomes concerning when particularly when the higher high, or the next swing up high is not higher than the prior swing. And it becomes concerning if the dip in the swing, downswing, is lower than the prior downswing, okay? And that happened in the summertime right here. See? Right? In this section, which is where, the price peaked at 65,000, then it went down. First of all, it broke through the lower low, not only this one, but also this one, okay? That was the first sign of trouble. Then it bounced back, but didn't quite bounce as high as the 65,000. And then again, it broke below the last low and kept going lower. So, it doesn't always mean you gotta get out, but, probably trim positions when you start seeing the signs of weakness like that, right? Is you start seeing some lower lows, you're breaking through the prior lows. The highs on the upswings are not quite as high as they were in the prior. All right, well, we may tolerate one of these, blemishes in the trend, but when they keep piling up, then it's probably time to get out because the trend is breaking. And then it made a nice sort of base here from which it started breaking out again. And now, you wouldn't have caught it. And this is kind of a visual examination, right? You wouldn't have caught it right at the bottom. I mean, that would have been ballsy, but all the indicators were flashing sell. Now, granted, the lows have kind of flattened out, and that was maybe some indication that the downside pressure from the sellers was easing up. The sellers were sort of wearing out. So that was a first indication. Some people try to play that when you see some sideways action, but trend traders will wait, and they will wait for probably this signal here, because this is where the swing high was higher than the prior high, right? If we sort of look at this line here, right? It's higher. It's higher than the prior sort of major swing high. So that was my first higher high. So this is the prior high, this is the new high. And this is where I would have said, okay, maybe I would have even waited for this to happen. The low on the downswing. It made a low and then it started going back up. And as soon as it would have broken through that prior higher high, which is right here, approximately, is where I would have said, okay, things are looking up here. He's broken through the higher high the second time, made a higher low here. This is a trend that is, a resumption of a trend. I would have missed quite a bit from 30,000 to 45,000. C'est la vie. That's the trend trader's dilemma. You're not going to be early, but what you want to do is jump on a relatively established trend and then just keep riding it higher until we start seeing some lower highs and lower lows. So again, the higher highs, higher lows is a textbook definition. It rarely is so beautiful and so simple and so clear, but it helps understanding that concept. And when you see visually examine some charts, look for that pattern. Now, what visually examining charts is time consuming. So what tools do we have at our disposal to help us identify trends across the board, across thousands of coins? You're not going to be clicking through every single chart looking for that higher high, higher low. You'll do that once you find an interesting opportunity, and you'll start sort of analyzing, does it have those signs of a decent trend setup, right? So the tools that we have obviously is the screener. Now let's get into that screener. Now what we have done is created our own Altfin's trend ratings across the short-term, medium, and long-term basis. You can see that on the trend tab here. Short-term, medium-term, long-term basis. You can also see what is the slope of that trend line. Okay, and so if it's rising or declining. But these three, short-term, medium, and long-term trend ratings, are basically, we have that in our knowledge base explained, but basically utilize moving averages. Is one stacked above the other? Is the 5-day moving average higher than the 10-day, and that's higher than the 20-day, and so on? You can go into the knowledge base and look into it, but behind the scenes, that's what's happening. Is we're looking at those sort of crossovers to determine whether this is an uptrend or not. And so what you can do here is utilize that. Now, first of all, one quick way to do it is to go to Signal Summary and find a section with trends. Right here, trend and momentum. In fact, we have strong up trend across all three, short-term, medium, and long-term. And then we have broken them down, just strong uptrend on the short-term basis. So there's quite a few now, 548 coins that are in the strong uptrend on the short-term basis. No surprise, we've had a nice rally recently. But this could be a starting point. You could click on the 148 coins that are in a strong uptrend across all three time horizons. Okay, now these will be well-established trends by now. By the time it gets to a point where it's like a strong uptrend on the short-term, medium, long-term basis, we've had quite a bit of run. Okay, so what you may want to do is relax this a little bit, and so we can start our own filter from scratch, a custom filter, using the same ratings. So if you go to custom filter, MA trends, you've got here short-term, medium, and long-term trend. And we won't be so stringent, because if you want to catch a trend relatively early, right, and have fair amount of upside, then you can't be so picky about everything being just rosy and everything is in a strong uptrend. That works sometimes too. When you've got strong uptrend coins like we have here, Solana and so forth, the winners tend to be winners. thereafter. There is a reason, some kind of a fundamental reason why traders are excited about it. Fundamental buyers are excited about it. They want to own it. They're pushing it up, and the trends are strong across the board. Great, good place to start too. I want to show you perhaps to find other gems that may not have blossomed into these strong uptrends, maybe just getting started in their uptrends. In which case you would say, okay, short-term trend is up, not strong up. Up is enough, all right, add that. Medium trend is up as well, okay, add that. And that's a start. I'm not going to even bother with the long term. Maybe long term is still lukewarmish, maybe neutral. Maybe it's an uptrend, but not a strong uptrend. But I'm going to leave that out. Again, I want to just show you various ways of how to go about it. And keep some flexibility. Now, one other thing I do like to use is a market cap. I'm going to put 100 million minimum market cap that eliminates some of the junk out there. And also, one other thing they like to do is to make sure that the price is above the 200-day moving average. That for me is kind of a must. If it's below that, it could be a great catch, but for me, that's too early. I like to see prices and situations where prices above the 200-day moving average. So I'll add that as a filter as well. Now we're down to 134 items. We could also look at now add additional sort of filter criteria to fine tune that filter to say RSI 14 is between 50 and 70, between 50 and 70. And I know this is jumping ahead of ourselves a little bit. We'll cover RSI later, but RSI, it oscillates between 0 and 100. 100 is like, whoa, it's way overbought. 0, I mean, you'll probably never see these extremes, but above 70 is overbought, below 30 is oversold. So I want to see some strength. So I want it to be above the 50, sort of the middle, but I don't want it to be overbought. So let's just say between 50 and 70. And that may improve my entry point where we're just getting sort of the mojo going here. So we're down to 99. I'm going to save that as early uptrend. Early uptrend. I'll give you the number. All right, save that. Now, once you save that, you'll have it under your saved filters right here. Okay, you can apply that in the future and then click on done. All right, let's see what we've got here. Binance, Solana. All right, so Ripple as well. We can look at the charts, but basically, these are some interesting potential situations for you to choose from and then go in the greater detail. I didn't think Solana was going to be on this list, honestly, but fine. Looks like it's on this, made the list. I'm going to just hide some of the other things, but looks like it also had a MACD bullish crossover recently. So, then you kind of start visually sort of checking off some of the things as well. I'm going to get rid of this moving average. It's above the 200-day moving average. Obviously, that's where we want it. And RSI, let's see, where is RSI? RSI is right where we want it, 62, right? It's rising. So, yeah, great. I'd be interested in buying it here. Yeah. Anyhow, plus look at those big volume days, the last couple of days. Sweet. So that's one way to find an uptrend, coins in an uptrend, and then you kind of have to sort of look at the charts, look at where the resistance support levels are, but this will greatly accelerate that process of finding potential winners. And again, finding trade setups with high success possibility or probability. Trading with trend is the most important concept. it helps. I think it will get you 50% there. And then fine tuning a few other things will help increase that probability success rate further. Now, let's get back to our theory, the boring theory. What else can we do? We demonstrated the higher highs, higher lows, also using the trend ratings, the short, medium, and long term. Oh, by the way, one other thing, it's kind of a cool thing that I wanted to show you is now that you have the filter created, your own filter, if you go to signal summary next time you kind of log in and you just kind of want to quickly jump to things, then the signal summary in the upper section right here, these are your filters. As you create them, they will show up here with the results. And you can just click right at that link, and they will basically take you to the screener with that filter applied already. Okay, that's just a user tip. And now let's get into sort of the I guess the crossover, or the technique that's often used as signals for trend trading as well. And those are moving averages. Specifically, here we go. Quickly, what are moving averages? I assume most of you understand a moving average, or at least understand an average, right? Averages, we have, if we take, let's see, Cardano chart right here. Used to be a darling. Now it's not quite in a doghouse, but not as hyped. In any case, so moving averages, well, let's blow this up. And what I wanted to do is get rid of these moving averages for so far, and also the other indicators. All right, here we got nice chart. And so we start adding moving average to the chart. SMA 5, that's a 5-day moving average. So every one of these, in fact, let's all right, every one of these, so if you can see the red line here, it copies the price line. In fact, let's switch back to the line, maybe it'll be actually clear. Yeah, it is. So we got a line chart in black, and SMA simple moving average, a 5-day moving average in red. Now, if you were on hourly time interval, then it would be a 5-hour moving average, simple moving average, right? And it's just simply adding, making an average out of the last 5 closing prices. In this case, we're on a daily, so it's a last 5 daily closes. Because it only uses 5 days, it copies the trend, or the price line very, very closely. It doesn't deviate much from it. It smooths out things a bit, right? I mean, you can see the black line is up and down, while the red line is smoother. So it does help in tuning out some of the noise. But let's now add another moving average, the 20 simple day moving average, right? And that one's in brown. That one moves a little bit slower than the 5-day, because it takes 20 days. And so 1 day or a couple of days of volatility will not change much for the 20-day moving average. Okay, so the bigger, or the longer the time horizon used, so when we use the 200-day one, right, that one's a whale. That one's moving really slow. It's great for a long-term trend assessment, but it doesn't get phased by not even daily, not even weekly, or not even monthly volatility will phase the 200-day moving average. And so I just wanted to demonstrate the fact that the shorter the moving average time horizon, the quicker it oscillates, the quicker it responds to the price changes. and the longer time horizon moving averages are clearly slower moving or slower changing. Now, the exponential moving average is similar, but what it does, it actually puts greater weight on the most recent prices. And so it actually responds to the price changes a bit faster than SMA. Now let's take a look at examples. I'm going to get rid of the SMA 20 and SMA 200. So what we have now is the price in black and simple moving average 5-day. And now let's compare it to the EMA, exponential moving average. We don't have a 5-day one. Okay, so we'll use EMA 9 in comparison to the SMA 10. That's pretty close. So EMA 9 is in green. As you can see, it's even closer to the price line. And it responds to the sort of the volatility a bit more. It's more sensitive to the volatility in price than the simple moving average. Okay, and that's because it adds greater weight to the more recent prices, whereas the simple moving averages, it doesn't make a difference. It really just takes an average of 5 or 10 or 20 values. All right, so now knowing the difference, which you may have known already, but it's important to understand, what that means for us is that since EMAs are a little bit more responsive, now it's all lagging data, right? I mean, obviously we're using historical data, but EMA is a bit faster to recognize or to indicate a certain change in price. And so those tend to be better for trading more volatile markets, which cryptocurrencies are definitely in that category, whereas the SMAs are a little bit slower moving and aren't as useful for short-term trading particularly. They're okay with assessing long-term trends. All right. Now, having said that, so the technique traders use to identify buy or sell signals using moving averages are crossovers, meaning when, let's see, when a slower moving or a shorter term moving average crosses above the slower or longer term moving average, that tends to be a buy signal, a bullish signal that indicates, hey, there is some increasing momentum and increasing sort of slope of the trend line that we should be paying attention to, and that could lead to some further gains. Okay, we'll look at some examples here. You know, which moving averages should we, or which time frame, or sorry, not time frame, but time horizon should we use, right? The shorter moving averages, and this applies to both the simple and the exponential moving averages, the shorter sort of time horizon, sort of in this case, 5, 10, 20 day, will identify an emerging trend sooner. Okay, so that's the positive. Using the shorter term moving averages will help you catch a potential trend early, and that leaves more upside potential. The downside of that is that you will have more false breakouts or false signals because you're trying to catch them early, and early on could be just a head fake. Okay, the medium or longer term moving averages, so the 20, 30, 50, 100, 200 day moving averages, are slower moving, so they will help you identify trends that are more established or even in the later stages, which is great in that you will not have head fakes, false breakouts, or false signals as often, but you will have given up a lot of the upside already because you will catch the trend in the later stages. All right, so those are sort of the benefits and the pros and cons, the pros and cons of each. Now, what I have found as a good compromise, and I'm not the only one, but many traders like to trade, sort of a compromise would be using the EMA 12 and EMA 50 for crossover signals. The EMA 12 is not the shortest one, but it's relatively sensitive to price changes. And EMA 50 is sort of a mid-term moving average that shows us, it already captures the trend relatively well. And so combining those two can give us some decent setups of catching the trend relatively early, but not too early, and leaving some decent upside as well. Now, let's see how we could do that. How do we screen coins for such crossovers? So we're back at the screener, and I'm going to go to moving averages. We're talking about the EMA 12 crossing above EMA 50, right? Within the last 5 intervals. Add that filter. And that's it. That's the basic building block of this. Now, as I typically do, I will also add another filter to make sure that it's relatively in an uptrend. So the price is above, in the longer term, the price is above the simple moving average, 200-day moving average. Also market cap, so I'm not too far in the weeds in a tiny cap, micro cap land. So I added those two things, and one other sort of fine-tuning criteria is that what we have here is an EMA 12-day has crossed over above the EMA 50. Let's go ahead and apply it. All right. Now let's look at the charts, and let's add these analytics to the chart so we can see the right analytics. You can say show filter on chart. All right. Some things are not needed here. And so we have EMA 12, and I'll add EMA 50, okay? Now, you'll notice in some cases, the EMA 12, the green, bright green one, this one is still trending nicely up. This one is kind of breaking already. Well, this is a stable coin. This is irrelevant. But my point is that I'm going to add another filter criteria to say, I want to make sure that that EMA 12, that moving average, is still pointed up and not sort of flat or breaking down, because that would indicate sort of losing momentum. So there's one other cherry on the top that I'm going to put, which is that EMA trend. So this meaning the slope, is it this way, that way? The slope of the EMA 12, I want it to be higher than 0%, right? I want it to be still positively rising. That eliminated really not much in terms of the filter criteria or the results. All right, I'm going to save this again, and this is my EMA 1250 crossover, actually bullish crossover, okay, because we'll do a bearish one as well. Save. Fantastic. Again, then you can come back to that filter in the future, or you can go to the signal summary and jump to these results from there. But let's take a look. Here we got XRP, Ripple, right? Recent crossover here, and the price seems to be trending higher. Now these will be a longer lasting trades. We're not going to be in and out of these altcoins on a daily basis. These trades may last weeks, even longer. So let's take a bigger picture here for Ripple here to demonstrate how that would have done just in the recent history. 1 year chart here. So let's examine here. This is a bearish crossover. So somewhere here we would have gotten a bullish crossover here around, call it 25 cents. Beautifully captured the upside. Now you didn't sell on the top, if you follow the rule, which is exiting when the shorter term moving average crossed below the longer term, which would have been here around 33 cents. So you would have gone from, capture the 25 to 33 cents. Now you may have used other indicators to get you out sooner than that, but just using this would have gotten you still decent, 30% upside. Then you would have done nothing unless you actually short as well. But let's pretend we don't do anything on the short side, just on the bullish side. You would have gotten you into the trade again here, somewhere around 50 cents. You would have to go through these ups and down swings, hang in there. It didn't quite cross over, and then major, massive gain right here, right? Again, you wouldn't have sold it right on the top, but you'd have sold it, for pretty decent gains, right? Now, this is what happens with this strategy. A lot of times you'll have false crossovers. In fact, you may many times lose a little bit of money actually with these, but then it'll get you into a trade that will have a massive upside. Now, notice, I mean, this trade lasted from February through May, end of May. I mean, we're talking months, right? And then again, nothing. No crossover for a long time until here. Now, again, we didn't get it on the complete bottom, right? Let's circle that. We didn't get in here. Yeah, that would have been nice. But I mean, dream on. We wouldn't have gotten in here with this strategy. We would have gotten in here, right here. But it's okay. Again, I'm gonna happily give up this upside to kind of get in on a more established trend is what this strategy helps you do. And notice the other thing is that this crossover happened above the prior high, right? Higher highs, higher lows. And that's what you can then layer on sort of that knowledge that you just learned. Are we making higher highs, higher lows, at least for a couple of swings? Looks like we are. This was a higher high. This was in fact already a higher low. And so this crossover seemed quite legit. I mean, hindsight 2020 is easy, obviously going back, but I warn you, you will have breakouts that won't work, right? The crossovers that won't work. But again, you would have gotten into the trade here and rode it until the crossover, bearish crossover happened right here. So from about 70 cents to about $1 and change, not bad. Now here recently we've got that crossover, which is why we have it in our filter here around $1. And I think let's see, let's clear everything else. That looks like a legit crossover. So that now, oops. What I wanted to show you also that this same strategy works, and that's true for any strategy. It works across all time intervals. So if you're fidgeting because you want to do a lot of trades, and frankly, if you go to, for example, an hourly time interval, you'll have more trades, ins and outs. The positive is that you will not have big downside because you will get out sooner. The negative is that you will also not have as much upside on a per trade basis. Yeah, let's look at Cardano here. Now we're in an hourly time interval now, okay? So let me get a week's worth of data. Let's do month. Ooh, month is busy. No, that's okay. Cool. So this is a month worth of data, and you can follow the crossovers here, right? This was a bullish crossover. Again, right here, and you would have gotten you probably would have gotten out here, but then again, because this it's a little bit, let's see if we can zoom in here, what the hell is going on here, because it's like it crossed. Look at that. Look at that. Actually, I'm not even sure if it quite crossed over here. It may have just touched it, but you would have probably gotten out and then get back in here. It's unclear. It's really, you know, the system would obviously alarm you, but that probably you've gotten back in and hung in there, and then got some decent gains afterwards. Now I'm trying to get out of this Zoom and I can't find a way to do that. Oh, here we go. I don't know my own system. Anyhow, so the point of this exercise is that you can do this setup and strategy on the lower time intervals as well, and the same rules apply. Nothing changes, and maybe it's better practice. You know, you'll get more signals, but you know, you'll get a lot of whipsaws as well. For example, here, you know, this was at the beginning of October. You know, there were a lot of crossovers here. In, out, in, out, in, out. But then you get in and get a major gain. In, out, out. Right? So you'll have those losses. Hopefully you'll keep those small, but then you'll get some major gains. Let's see. Now, this is one combination of possibly many. If you really want to find potential trend, emerging trends really early, what you would have to do, obviously, is use even shorter term moving averages. All right, so instead of the 12 and 50, maybe you would use 12 and 26, or maybe you would use an SMA 5 and 20. Okay, so play around with it. Again, there's a compromise or a trade-off, that is, with using really short-term moving averages. Helps you get and catch a potential emerging trend early, but you may have a lot of false positives or false breakouts. And so I think the EMA 12 and 50 is a good compromise of being relatively early, but not too early, and still leaving decent amount of upside. Let's see if I have anything else on my list. Let's see how we're doing on time. All right, well, we've got a few minutes left. I want to do a trade. So I'm a trade junkie. Let's go to the platform and utilize just this past strategy and find something sexy. EMA crossed, right? Blah, blah, blah. Let's see. Yep. Well, we've got a lot to choose from. Wait, we're on the day on the oh, that's an hourly. Okay, I was surprised to see some of these names here. Okay, so now we're back on the daily, right? And Ripple was looking good. Let's look at Uniswap as well. My bad. Let's take a look at the longer term picture here with Uniswap. So we recently got a buy signal based on this strategy in the last few days. And let's see, is the price is above the 200-day moving average, because I think that's part of our criteria. Is that right? Ooh, barely. Okay. In fact, may have just dipped under it today. Yeah, well, right. It's right on the brink. Okay, that to me is too close to comfort. So let's move on to the next. Next one on the list, Litecoin. All right. Litecoin. 1 year time horizon. Let's add that 200-day moving average back in the picture. Ooh, just recently broke through it with quite the conviction. That's fine with me. The crossover happened. Well, I've already missed some upside, but that's okay. And you notice the big resistance level next one will be right here, right? That's where this price has had some issues in the past. Right here, it served as a support right here, resistance here, resistance here. But I think we can approach that level from these levels, which would be from $200 or so, another 20%, not bad. In fact, we just looks like we just crossed another important resistance level, which was $200 itself. It often happens that the resistance levels are round numbers, okay? Especially the big round numbers, right? For Bitcoin, 50,000, 60,000. It happens oftentimes that the market participants find it too expensive around that number. It's psychological, and others, and so they will start selling. Others, when we dip back to that round number, find it as good support. And so what I like about this is that the 200-day moving average, as you can see, the red line is not far. So that's a good support level. I think that's my downside now with this trade if I were to buy Litecoin here. So based on this signal, Litecoin is a buy. Let's make sure that we have the trend right as well. I'll look at the overview on the trends. Litecoin is in a strong uptrend up on the medium term, and the long term is down, but it's okay. Again, if you want to catch them early, you can't be a perfectionist. There could be a fair amount of upside from here. So let's go ahead and put on that trade. I'll go to trade. Let's hope it trades on Binance. I think that's a pretty safe bet. I've got a, let's see, I have a balance in Tether, so I'm going to use that. And I could take a look at the chart again, but I've already done that. Look at the trade book. Uh-oh. We're missing bids and asks. Well, that's a bug. Huh. Well, I apologize for that. So let's go back to the chart. Look at the 15-minute chart to get a sense of where it's trading. All right. So 199. Okay. Let's go ahead and buy it. Buy it right here. Let's just get it in. I mean, for the sake of this exercise, best price. Well, that's not updating. Limit price, and I want to buy about $1,000 worth. So that would be about 5 units of Litecoin. Let's go ahead and send the trade. Okay. It's in my open orders. Hopefully it'll go through. So I think that wraps it up for me, ladies and gentlemen. Let's see if we have some questions. A few questions here. Is a trend trader the same as momentum trader? Close to it. But I think momentum trader is a bit more aggressive, or the momentum trader really is looking for some really strong recent action. So that would be indicated by a MACD bullish crossover. Okay, that's a great momentum indicator, or breaking into new highs. Right, when you're hitting new highs, you sort of surpass the prior highs, or they don't have to be necessarily highs, but breakouts, but typically highs. That's momentum guy. The momentum trader is looking for those type of setups, really sort of acceleration in gains, while the trend trader is not that aggressive. Could you explain what intervals mean and what effect? Okay, interval means that, and we covered that in the prior lesson, so I encourage you to maybe review that as well. But interval means that the price data is broken into a daily. If we're on a daily time interval, which we are right here, then each one of these candles represents 1 day of trading. So this is daily time interval. Each day, each candle is 1 day. If I go to an hourly time interval, then each candle represents 1 hour worth of price action. Okay. So here I'm on an hourly for Solana. Each one of these candles is just 1 hour worth of data, prices. And last couple of questions. For short, medium, and long term, what are the average times to hold the coins? I don't know if I can answer that. And so is short term for a few weeks, midterm a month, long term a few months? Well, I can answer it with the short-term trend rating that we have uses the short-term moving averages. So the 5-day, 10-day, and 20. So typically that will indicate that this trend has evolved during the last 20 days. And then the medium is sort of 20, 30, 50. And then the long term is really like 50, 100, 200 days. Okay, guys, let me just double check. I answered all the questions. Super. Well, once again, thanks for everyone attending this webinar. The archive will be available on your education tab, which is right here. And look out for, again, a link for the upcoming lesson next week on Tuesday at the same time. And we will also share these notes with you in an email. Good luck, everyone. If you have any questions, please feel free to email me at invest@alfins.com. Cheers.